Thanks for clicking. We had an eventful week in China's real estate crisis this week, with dozens of real estate developers being suspended from the stock market, with news that China's real estate market slumped even further in the month of March, and we actually received some good news out of Evergrande.
Thank you.
The results of the billions of dollars of debts incurred by Chinese real estate developers and failure to pay those debts are becoming more and more apparent as this crisis unfolds and China's real estate market continues to flounder. So what I want to do today is go over Evergrande, as we did receive some good news. Then I want to talk about the amount of developers that missed their March 31st deadline to come clean on their debts. And then I want to go over the data that we just got this week on Chinese real estate market, as it looks like it's getting even worse. Worse even than the past few months. As we'll see later, it's becoming more and more apparent that these real estate developers don't want Beijing or the world to see the true extent of their debts.
You're talking it's none of your business.
So we really don't know as of yet how deep this debt crisis is going to go. We'll continue to have updates on this channel as China's real estate crisis unfolds. Click like and subscribe if you want to get those updates, but for now, let's get into this Evergrande news. So despite their bonds plummeting over the past few months, having billions of dollars seized, and undergoing a default, Evergrande actually had some good news when it came out this week that Evergrande had resumed 95% of its projects under construction. We've talked in the past about Evergrande selling off its asset to state-owned companies. We talked about a few weeks ago about Evergrande raising hundreds of millions of dollars from the sale of these projects. So it's highly likely that Evergrande is using the funds generated from these asset sales to resume construction under Beijing's direction. While Beijing was fairly adamant that there would not be any bailouts at the beginning of this real estate crisis, a post from Evergrande noted that the provincial support, read Beijing, were what made the resumption of these construction projects possible.
Because I made that possible.
So even more evidence this week, Beijing is stepping in and ensuring that these projects that were previously sold to would-be homeowners are going to get complete regardless of Evergrande's financing. They've bought up, or at least these state-owned entities have bought up these Evergrande projects, which Evergrande is now using those funds to resume construction. So while this is not a direct bailout, they're not just giving the money to Evergrande, clearly the government is stepping in to ensure these projects continue to be constructed. But it's not clear as of yet if even Beijing understands the true extent of the debt held by these real estate developers that we've talked about over these past few months. We've been talking for a few weeks about the March 31st deadline, where Chinese real estate developers were required to submit their audited reports, and these reports were highly anticipated by international and domestic investors, as well as Beijing, as the real estate developers were widely expected to come clean on the true extent of their debts. However, 32 real estate developers failed to submit these audited reports, and as a result, were suspended from trading. Well, we've gone over in the past on this channel that multiple auditor resignations occurred right before the March 31st deadline. Many of these developers that missed the deadline are citing COVID as their main reason for not submitting their audited books, for not coming clean on their debts.
Due to COVID.
So obviously the COVID lockdowns could have had a part to play in these real estate developers missing this much anticipated deadline.
It was COVID related.
But given the amount of auditor resignations that we've seen over the past few months, as more and more auditors cited irregularities and violations of basic accounting principles, it does lead you to wonder whether or not there were other reasons for the delay of these books. Given that many have been anticipating seeing these books, seeing this true state of these Chinese real estate developers' debts, you would think that they would want to get them out as soon as possible if there was nothing to hide. But as we've seen over the past few months, past 6 months since this real estate crisis began, where there's smoke, there's fire with these real estate developers. So it's just a matter of time before we actually do get to see what's on these books. And until then, we have 32 real estate developers unable to sell their shares on the market. And these real estate developers really aren't doing that great in the first place. News came out this week that Chinese home sales had dropped 53% in the month of March. Given that, as we said, real estate constitutes 1/3 of China's overall economy, 1/3 of China's GDP, that's a very, very bad sign going forward, especially at a time when these developers are already having a cash crunch. It's not a great sign for the economy, and it's also not a great sign for the People's Bank of China, who have been engaged in at least some form of monetary stimulus over the past few months. They have lowered interest rates, they have lowered the reserve requirement ratio, these triple R cuts, in the past few months, and they don't seem to be working, as home sales they're not only falling, but they're falling faster, more steeply than they have in the past 3 months. In January, they fell by 40%. In February, they fell by 47%. And then come March, they've fallen by 53%. So the sale of Chinese real estate is definitely on a steep decline at a time when these developers really do need to raise funds. As we've seen, international capital has dried up. China hasn't yet stepped in, as of yet, which we'll get to. These developers need funds, and the only way they can get funds is through home sales, which are dropping and dropping fast. China did announce on Wednesday that once it deems it appropriate,
don't rush me, sunshine. You've been rushing me all fucking night.
It will be providing the necessary monetary policy support to prop up this economy. Given the multiple deadlines that have been missed, given the stock plunges that we've seen over the past few months, we've seen major drops in China's real estate market in the amount of homes sold and in the price of those homes that are being sold. Given all these drops, one could wonder, what is China waiting for? Why hasn't the People's Bank of China moved yet? And I think it really has something to do with the amount of COVID cases and the lockdowns currently occurring in China. China is at its highest level of cases since the pandemic began. It's at over 20,000 cases per day, and I think China wants to wait until these lockdowns are over and before it goes on to a big stimulus push. It wants to wait until everything is back to semi-normal. And I know we've heard that before, especially in the West. But I think they want to wait until everything is back to semi-normal when the stimulus will do the most good. There's very little point in allowing people to borrow more, allowing them to borrow cheaper, if there's nothing to spend it on, if they're not allowed to go out and spend it. In fact, it could be counterproductive to China's overall lockdown policy. And I think China is also taking a wait-and-see attitude. We have a lot of uncertainty here in the West with our inflation rate going up and up and up, and our interest rates set to rise as well, with many thinking that the United States is going to be entering a recession soon. That's not good for China. And we also have a large amount of uncertainty right now with the Russian invasion of Ukraine. Not to mention the amount of COVID cases that China is dealing with. I think all these things are on the minds of policymakers in China while they wait to announce new monetary policy support measures in the case of lower interest rates or triple R cuts. So I think China is just waiting to see which way the wind blows, waiting to get their COVID cases under control, at which point I think they're going to come out with some new monetary policy tools to try to prop up this economy, which is going to be looking more and more like it's going to be very hard-pressed to meet China's target this year. We will obviously have updates out on this real estate crisis on China's economy as this unfolds. Click like and subscribe if you want to get those updates, and thanks so much for watching.